Okay, so we start. Hello and welcome to this lunch briefing. I'm Ugo Panizza, professor of economics here, and it's a great pleasure to introduce Alexandre Swoboda. Alexandre doesn't need much of an introduction here. He has been professor at the Institute since 1969, which makes it dangerously close to half a century. He has been director of the Institute for 10 years. He's the founding director of the International Center for Monetary and Banking Studies, which is also here located at the Institute. He has been in the board of the Swiss National Central Bank. And he's very much linked to the history of the Institute. So when I got a job offer here, I was talking with a friend in Washington. I said, I'm going to go and work at the Graduate Institute. And my friend told me, that's where Alexandre Swoboda is. So that was... So Alexandre will be talking about Bitcoin, blockchain, and all that jazz, but I don't think you'll be playing the clarinet, right? No. Okay, Alexandre.
Thank you very much. I wish I could play the clarinet, but I guess Bitcoin is playing all sorts of things on the markets these days. Let me try and handle that. So that gives you the title. What I want to start with is a slide I gave when I first presented, two slides, which I gave when I first presented something on Bitcoin in China in June of 2015. And the first slide, where is it? Yep. Do we have a problem? Okay, it goes the other way around. Sorry. The degree to which economists have ignored Bitcoin is surpassed only by the extent to which Bitcoin enthusiasts have ignored economics. Now, this is what got me interested in the subject, because I don't understand anything about cryptography and stuff like that, well, a little bit. But I thought, well, people are talking about this new currency. Is it a money? Is it a currency? What in the world is it? And so I started reading up a little bit and started giving a talk or two. And I think economists are now a little bit less ignorant about Bitcoin. I'm not sure that Bitcoin enthusiasts are much more cognizant of economics, but we'll see. The second slide I presented was it refuses to go. Is there any way I can
This thing doesn't control it? Yeah. This two.
Which one? The arrow?
Yes, the arrow.
That's what I was doing, but maybe okay. I was doing it too hard. Okay, that's the second slide I presented. And that second slide shows you the price of Bitcoin from basically the beginnings, 2010, till June 2015. Now, people got very excited at the time, and this is where I started also looking at it. Actually, my wife told me, you should look at that. You're an economist. I'm just an investment person. Can you explain that to me? I couldn't, but I looked at it. So, and I got interested. So in December 2013, Bitcoin reached, on an average, on the exchanges, $11.51. And then it started coming down. What I found surprising at the time is that it didn't collapse completely. And so I said, well, there's a good chance that it might collapse further. Well, the rest is history, and this is history. If you look at the performance till today, we've marked on that chart the date of June 2015, the December event, and then you can see that it stabilized for a while, but then since 2017, or the second half of 16, beginning of 2017, it started on the rise again. Now, it's also very volatile. Now, let me get to what I want to talk about. I will start with the Bitcoin Utopia, and then ask a few things about reminders, and I'll go fairly quickly of what Bitcoin is, the supply and demand for Bitcoins, and an important thing is all the industry that has emerged around the Bitcoin system and other cryptocurrencies, and that raises the question of, is Bitcoin money, in what sense is it? And then we talk briefly about other cryptocurrencies and ICOs, and then the program that is at the heart of Bitcoin, the so-called blockchain or distributed ledger, is perhaps the most important things, and then we will get a number of policy challenges. I don't know, I'll rush through some of that to try and get to the conclusion. Okay. Now, the Bitcoin Utopia. And that's sort of the vision of the cypherpunks who started the train rolling in the 1980s. Fed up with money, fed up with the control of governments, we want to take over money, the banking system, and so on. So, we will invent something that is universally accepted in exchange by everybody, that is transferable between people on a peer-to-peer basis, safely and costlessly. The quantity is fixed, okay, so you cannot tinker around with the quantity of money. The anonymity of transactions is guaranteed, and we don't need intermediaries because they're really basically untrustworthy. Look at the banks and so on. And the guardian of the whole edifice is an incorruptible software. That is basically the system that a man, a group of people, somebody called Satoshi Nakamoto created and wrote a piece in 2009 about it, and that was then developed into Bitcoin. Now, what is Bitcoin? Well, Bitcoin, it's a system, it's a network basically operating. Oh, you have to distinguish between two things. The thing that is traded on the network, which is Bitcoin with a small b, and the system, which is Bitcoin with a capital B. And Bitcoin, the system, is basically a network which operates software on a computer program with, at its heart, the so-called Bitcoin blockchain. The Bitcoin blockchain is basically a database. It's a distributed ledger shared by all who download. It's accessible to all those who download the software. However, the people who participate, who are on that network, cannot change the contents of the ledger just by whim. Okay? There are going to be transactions happening which will change the ledger. But the transactions have to be verified. You have to make sure there is not double spending, that the person who wants to send bitcoins to another person actually has the bitcoins and is not sending it to anybody else. So that each bitcoin will be at a specific address on the ledger, and then when it's transferred, it moves to another address, but that has to be verified. And the process of verification is done through so-called miners, people who have very powerful computers, who have to solve complicated mathematical problem to be sure that actually to authenticate, if you wish, the transaction, make sure there is no duplication. That is a so-called consensus system, which ensures that the solution is accepted by a majority of the network members. The mine and bitcoins are created in the process of verification. The miners compete to solve a complicated mathematical problem, which will verify the authenticity of the transaction, will enable that the change in the ledger, and then blocks of transactions are put in the ledger, and they constitute a chain. Each ledger, each block is actually going back to the preceding block's address, and so on. So you can trace the whole history of whatever this Bitcoin is. Now, so the extremely interesting thing about Bitcoin is it's a closed system in which actually the production of Bitcoins is endogenous, but it is limited by the system to 21 million Bitcoins at most, okay? So, and these Bitcoins, the 21 million, will be reached asymptotically by 2040 or so is the forecast. To date, there are about 17 million Bitcoins that have been issued. Now, what is Bitcoin, the thing, with a small b? Well, think of it, let me simplify, think of it as a computer file that is somewhere, this is not quite accurate, that is somewhere on the ledger. If you, well, I'll skip that part, it's a bit complicated. More concretely, if you want, suppose you want to install the Bitcoin software on your computer, so that you can do something within the system. You download a digital wallet which you can get from a number of providers or directly from an organization. That wallet is assigned a public key, which everybody can see. It's a long string of letters and figures. That wallet so is assigned a public key, and you get a private key, which is your password. With these, you can store Bitcoins, receive and send Bitcoins from and to other addresses, if you wish. Okay? Think of it as if you had a numbered bank account, and you're the only one who knows the number. Okay? And you can unlock that account only with your private key. Okay? People can see the number. They don't know, however, who the beneficial owner is. And then you, the beneficial owner, also have this private key, which allows you to unlock your wallet and transfer the Bitcoins that are there to somebody else. Okay? How does this differ from electronic banking? Well, it's different from electronic banking because it's peer-to-peer. You don't have to go through a trusted intermediary, the bank. There is a verification system that is being done by cryptography, and again, not by the bank. The verification system itself produces the Bitcoins. Now, let's look briefly at the supply of Bitcoins and then talk a little bit about the demand. On this graph, the blue line represents the Bitcoins mined to date. I don't call them, it's not really exactly the available supply, because through hacking and so on, a part of the Bitcoins mined have been lost. So some of them have been destroyed, but most of them are around, and that's how they are. And they are supposed to grow asymptotically to 21 million ceiling by 2040. But the new Bitcoins issued are issued at a decreasing rate. If you wish, the red line is a quarterly change in the Bitcoin supply. You can see that the additions are less and less through time. If you wish, the red line is a derivative of the blue line. Now, now we have the supply. Where does the demand come from? It comes from various sources. Maybe I start with true believers. Those are the people who really believe in the Bitcoin utopia and see that as a system which ideologically they want to be part of, and they buy Bitcoins for that purpose. The original motivation is a demand for commercial transactions, and that was the motivation of the creators of the system. It would allow you to buy goods and services from, or sell goods and services measured in Bitcoin among the participants in the Bitcoin network. So if I want to have somebody, if I want to buy something in Bitcoin, I find somebody who's selling stuff, accepting Bitcoin for his goods. So I buy my fridge with a Bitcoin by transferring Bitcoins from my account to that of the person selling the fridge, or to the company selling the fridge. Why would sellers of goods and services accept Bitcoins? And why would buyers of goods and services want Bitcoins? Well, part of it is anonymity on the part of the buyers of goods and services, and on the part of sellers of goods and services, it's just a way for most of them to satisfy that demand which expresses itself in Bitcoin. They are sort of loss leaders for the sites that quote Bitcoins. But note that when you go on one of those online stores which accepts Bitcoins, what you find is that the prices are always quoted in some other currency also, that is in dollars or euros or whatever. And then there is an exchange rate given next to it. And that exchange rate tells you how much it costs in Bitcoin, and then you buy that Bitcoin, and and the seller receives them if you finalize a transaction in a small amount of time, and the seller immediately can sell it on an exchange. Now, if you think of what is the demand, where does the demand come from today, most of it is speculative demand, okay? Most of it is people who just buy Bitcoins because they believe the price of Bitcoin is going to go up tomorrow. And they have been right. Or they believe that Bitcoin has a long-term value that's maybe the true believers, that is much larger than the value today. So they start buying Bitcoins in the expectation that the price will rise. As the supply actually is quite limited, the price variability any shift in demand will provoke a big increase in price, and that motivates people. They are all getting excited. Shouldn't I buy more? And this is typically what happens. As one website put it, the writer, blogger, said, well, I get worried because on Thanksgiving Day of this year, 100,000 more people opened accounts in Bitcoin at CoinDesk. So why did they do that? Well, because they were around the turkey with the family and so on. The young ones talked about, oh, Bitcoin, that exciting thing. And then in the conversation, people started buying Bitcoins. And by that token, there are more now Bitcoin accounts with CoinDesk than there are investment accounts with a large broker like Schwab. So, it's just that sort of folly which has made people talk about Bitcoin. Now, the issue of transactions cost, as the system generates more and more transactions, or there are more and more transactions costs are rising, the system is slowing down, and that's one of its problems. This is the result. It's a story of the various events on Bitcoin. You can find it somewhere. I think we can make that available. I don't have time to talk about it, except that what you see is that a lot of the ups and downs of the price of Bitcoin are linked to regulatory changes, to Bitcoins have been hacked, or to the beginning of maybe the futures market, which opened just yesterday. Now, the Bitcoin industry, there are all sorts of things that have grown around the Bitcoin system, around the Bitcoin software. These include digital exchanges. These are the most important ones. These are exchanges where you can trade your Bitcoin or other cryptocurrencies against real money, against dollars, against euros, against yen. It's becoming more difficult against yuan because the Chinese are, I think, rightly trying to put a lid on the story. There are digital wallet services. These are the people who are providing you wallets, the software, and install it on your computer or help you install it and so on. They also, and put all sorts of conveniences together with this installation, and they also cold store them in vaults. You've seen the story about the place in Zug where they're using an old Swiss Army subterranean fort to put all the machinery and it's a lot of electronics where the Bitcoins are stored. Mixers are people who help you make your account more anonymous. There are the mining pools. Mining has become so energy intensive and so difficult that people pool together their electronic resources to do the mining. Then there are all sorts of sundry services. And there is something called the Bitcoin Foundation, which sort of tries to get consensus on any development in the software, improving the software, but only with the agreement of all the members of the Bitcoin network. Now, what you want to note relative to the Utopia is that all these represent links of the Bitcoin ecosystem with the outside world, and they pose serious trust and security issues. At each one of those points, you can have a breach of security, and you have to trust somebody who is an intermediary. You're getting outside, or the outside world tries to communicate with the Bitcoin ecosystem, and that's a very big problem. Now, just this chart is sort of cute. We made it the other day, and it's the share of the volume of transactions, total transactions in Bitcoin traded by currency. Okay. Now you can see this big pink thing, which is the US dollar. The big green here is the Chinese yuan. Now, as time between January of 2013 and January and actually December of this year, you can see the shift. At the beginning, it's mainly US dollars, some euros, and maybe some Japanese yen. And then the yuan or the renminbi becomes more and more important. It becomes almost all important by January of this year, but then it dwindles again in the last few months. And that's partly because of Chinese regulation, but it's also because of, I think, the current okay, thanks. It's also a part of the current craze, and that shows basically that these are probably the last increases in the price are due to speculative demand. Okay. Now, given that, is Bitcoin money? Well, my answer to that is basically in the negative. How much time do I have?
Half an hour. Half an hour.
Well, no, I don't want. I'll take 5 minutes, hopefully. Okay, Bitcoin is not money. Money is usually defined as being something that is a unit of account, a medium of exchange, and a store of value. Okay, it's not a unit of account, and that's very important, because if the transactions domain of Bitcoin is small, people who are in there reckon in Bitcoins, but as soon as you go to the outside world, you have to translate into another currency. So that says that if everybody is using Celsius, except for a few crazy Anglo-Saxons who are using Fahrenheit, okay, but let's reduce it to a very few people. They're telling other people that they value things in Fahrenheit is not going to pass. It's not a good unit of account unless it's widely used. Okay. Secondly, it's not much of a medium of exchange for basically the speculative demand because of the variability, if you wish, of the price of Bitcoin in terms of other currencies. So you never know. So suppose that you have Bitcoin rising like this, the value rising. You're not going to use the Bitcoins you have to buy fridges and stuff like that. You're either going to keep them hoping the price will rise, or you're going to sell them to somebody who hopes the price is going to rise. Okay? And so basically it's not used for basically buying goods and services, except in a very few cases. And you can see that by figures that people have done, which show that most of the bitcoins today are not exchanged for other bitcoins. And they are either held or are in just currency speculation. Is it a store of value? Yes. It's a store of value like a commodity is. Except this is a commodity that has no alternative market. Okay? You don't have a price determination somewhere of something which is just an entry. So that it's very hard to think of what are the fundamentals that determine Bitcoin's price. Okay? It's very hard to have price discovery. And so but it is still like a commodity. It may go up, may go down. You may sell it for something else, for real money or not. So in that sense, it's a store of money. It is therefore not money, and it's currency in a very limited sense. It's currency within the Bitcoin system. Okay. Let me just then skip and say that there are advantages for small transactions. One basic problem is the cost of electricity of Bitcoin. It's been said that one Bitcoin transaction is equal to 8 days of the average US family's electricity consumption. It shows that Bitcoin uses a little bit less energy than Denmark, very few as uses in electricity, and a little bit more than Serbia uses in electricity, but it's basically the same. So this is the cost in terms of electricity from all the machines that are trying to mine, and you have the evolution of costs in a recent period here. Okay, let me just try to I'll skip about the other cryptocurrencies. There are lots of them, Ethereum and so on. The problem is that those are used in coin offerings. I am going to, how much time do you want me to stop?
It would be good if you leave 20 minutes for discussion.
Okay. Okay, that gives me 5 more minutes. Okay. People have been creating all sorts of other cryptocurrencies. And in particular, and I just want to talk about that, there are initial coin offerings. A number of IT firms have been trying to use initial coin offerings to finance themselves. And that's another craze that you have. These companies create a coin, a cryptocurrency, if you wish, which is built on the blockchain of somebody else, or creates its own blockchain, very often of Ethereum, of the Ether, which is a currency of the Ethereum. And then they sell that cryptocurrency to the public. They get funds for it. But what they do is they really promise you that you will be members of the association, you'll have some services from that, you'll help finance a great project. If that great project succeeds, then your coins will be worth more, all the more so that the people who do those initial coin offerings keep a healthy part for themselves, and the sky, and there is pie in the sky anyway. And they're very often selling half-baked ideas and sort of IT solutions in search of problems. What's interesting is you can go to, if you want to do an initial coin offering, you do a white paper, and you can go to the website, to the internet. You have a number of people who will supply you with a white paper, which looks very expensive, very, very smart and so on. And that white paper will cost you between $200 and, if you want a really sophisticated one, $1,500. Then you take that white paper in which they have put a few ideas for you, and a big, great board of consultants and so on, CEOs, COOs, etc., and you sell it on, and you issue it on the web. You have no security, no legal security whatsoever in many of those things on what you get, okay? And many of that are scams. Okay, let me skip this slide, except to say that, as many people have noticed, the distributed ledger is a game changer in the Bitcoin thing. It is not always tied to Bitcoin, and this is the really important innovation. Of those distributed ledgers, there are different versions. This is not a very good thing, but you have the traditional relationship between banks and a centralized ledger, a shared ledger, which anybody can access, the second thing, which is Bitcoin, and then something which is a private blockchain, where only, and it's called the permissioned blockchain, where only people who get permission get into that blockchain system. And I think that is a way of the future for many, many applications, which can be very fruitful in the future. Okay, last slide. Regulation. Well, regulation will be coming. It will be coming for consumer protection reasons, to guard against illegal transactions and money laundering, and to ensure financial stability, big switches between various types of assets as the Bitcoin and virtual currency space gets larger. In all cases here, you want to regulate the industry, the digital exchanges and wallet providers. Rather, you can't regulate the system, the ecosystem itself, without destroying it. Taxation, well, anonymity is going to raise questions about taxation. The taxation is also going to have problems, or will have to define how you treat, say, Bitcoin holdings, I guess as a commodity or maybe a security. And that will put all sorts of reporting and other requirements on exchanges and regulation of them. Finally, monetary policies. Do virtual currencies present a threat to monetary policy? Not at their present stage of development, but they pose a number of questions. Should central banks issue a digital currency of their own, and in what form? And there's been work done on that. The Chinese are working on that. The Swedes have said they would introduce one. The Uruguayans have, and this is something that is coming. As the central banks do that, one moves more and more towards a narrow banking type of system, and that will raise questions, very important questions, and perhaps mean a new industrialization of the banking system. By way of conclusion, though fintech such as distributed ledger technology holds much promise, be warned that virtual currencies and initial coin offerings can be dangerous to your wealth. Thank you very much.
So we have some time. We can take a few questions. So maybe we take 3 questions and then we see how it goes. So we have one there, and one there, and one there. And then let's take.
Hi. My question is regarding the distinction between a commodity and a currency in which you can buy things with. So one, I've seen in like stores in New York that you can buy things with Bitcoin. So is that just, you know, like the Celsius Fahrenheit distinction? It's just a matter of time before it becomes more common and then you can buy things in Bitcoin and it becomes like money. And also, as you seem to be describing it as a commodity. So let's say something like gold, that's both kind of a commodity, but it used to be like a money form of exchange. So is it something like gold? Can it turn into money? It seems like it's just a matter of like scale. Yeah, that's my question.
We take 3 or you want to answer? We take 3 or you want to answer one at a time?
Let me answer that one quickly while I remember what the question was, if I still do. The first thing is gold. Yes, indeed, gold used to be with the stamp of the sovereign or something written. Gold coins used to be a currency. Gold today is just a commodity. Now, it has value because partly it has industrial uses and jewelry and so on, partly because people believe that it's a good store of value. So it's a certain amount of confidence and so on. Now, when I say it's it is sort of a currency, but Bitcoin, but it's domain, it's transactions domain. When you can exchange goods or label claims in Bitcoin and settle them in Bitcoin is still very limited. And for it to be really a currency, it has to be accepted more widely. That may happen, but there are some problems in the Bitcoin system which militate against that happening. There are 2 things in particular. It's not legal tender. It's so compared to other types of monies in settling claims. Also, the system has run to its limit. I talked a little bit about scalability, I think, or maybe I didn't. One of the major problems of Bitcoin is that as the number of transactions increases, the problem to be solved becomes harder and harder. The time it takes to solve it gets longer, so the time between the time you've given the order for a transfer and the time of settlement has increased beyond the 10 minutes that were guaranteed at the beginning in practice. Also, if you want to get your transaction at the top of a queue, you pay the miners an extra transaction fee, so the transaction costs are running, and the system is not able to scale anymore.
So we have a question there, one there.
Hi, so my question is, it seems like a lot of what you discussed, especially the criticisms, are specifically targeted to Bitcoin and the various facets that are built into the ecosystem for that. But considering that for a lot of the other cryptocurrencies, they are designed differently. So for example, Ethereum is much more targeted at processing these smart contracts. So there's inflation built in, so it's a very different ecosystem. So more generally, in thinking about cryptocurrencies, if we want to actually have a system where it's feasible for it to be considered as a global currency, how might one design this? So in your view, is this even possible? And if not, if there's some sort of fundamental aspect of cryptocurrency that makes it not possible to ever implement on a global scale, what might that be?
Okay. Sorry. suppose that one can solve the problem of scalability, which is tied to the method of consensus, which is proof of work and so on. Suppose, I mean, let's have a pipe dream. Suppose we can do that. You still, why isn't there a global currency anyway? I think here you're touching on the interface between currencies and money and politics. I mean, basically, and nation states. Okay, very often, well, some economists would say that you can define a nation state by the fact that it has a particular currency or money, okay, that it uses as legal tender, and that's the basis of taxation and so on. And I don't see a global virtual currency until we have a world society or world anarchy, the ideal communist state or something of that sort.
Hello, thank you for your talk. I have one question regarding the distributed nature of blockchain. So basically, part of its attractiveness comes from the fact that everyone can take part and there's no central authority. At the same time, we have states who basically have the monopoly of power and also on regulation. So how would you see the future adoption of public blockchains with regard to this disparity of centralization and distribution?
Okay, just on that, I was looking at an interview of Philip Hildebrand the other day, and the point he was making was talking about cryptocurrencies or Bitcoin or whatever. It was very brief. He was making just one simple point, that innovations in money tend to come from private initiatives, invention of going from coins to banknotes to then centralized electronic systems and so on and so forth. But that after a while, they thrive. I mean, governments are going to take control. And I think that is going to be true. Now there will be, I think, spaces where you can have no central authority in a limited sense. But I think even there, you still have different, and that rejoins something we were saying before, that you have. Money is a political thing, so it has to have a legal infrastructure. That legal infrastructure is going to be rooted in a particular state, and I think so that the universality is not there. Okay, now.
Yes, good afternoon. There's been some interesting comparisons between blockchain technology and the internet, like say 20 years ago. And so internet in 1997, they said there was a lot of promise, enthusiasm, and then obviously there came the crash, and then only the strong business model survived, and today we have Amazon, Google, and so on. So today, blockchain technology is supposedly at that level, and something similar might happen in the future. What is your take on this comparison between blockchain technology and the internet 20 years ago?
I think that's a perfectly apt comparison. I would extend it beyond blockchain. I think it's blockchain combined with smart contracts. I think you mentioned smart contracts, combined with deep learning, artificial intelligence, and basic developments in fintech, which go beyond the financial area. I think these will change very much the way in which some tasks are done. They can be automated, they can be made more speedy, and that's going to to be a really important change to the way and productive increase in productivity. Now, remember though that with the internet there was a dot-com bubble, and the dot-com bubble has many similarities that people have noted to what's happening now with bitcoins, ICOs, and so on. As some people have said, when the tide goes out, you'll see who is naked. And I think you'll see many naked startups in the process. But as some people have also pointed out, the four giants sort of come from the internet era. Maybe they won't be, again, giants like that, but there'll certainly be a change in the way people do business, back office, and so on.
To go up the scale, maybe, to the further future, there are people who say that whatever happens, the cryptocurrencies will become the currencies of the future. Now, how would you react to that?
Well, I think in a way I already have, maybe, but I also, if we look that long, that far into the future, there'll be something completely different from today's cryptocurrencies. So I don't think, well, yes, maybe in some near future, national monies will be issued as cryptocurrencies. There's a pretty good chance that that will happen. Well, let me forecast something beyond my life expectancy in 50 years, so I won't be there to argue with you.
Thank you very much for this very interesting talk. A currency shapes behavior, and today fiat currencies are a tool to allocate resources within nation states and beyond. And I was wondering if maybe in the future we could see more than one currency per nation, or let's say supra-nation state, to shape behavior. And we have key challenges today, which are social imbalances, environmental imbalances. So there is some thinking emerging about maybe creating some social digital currencies or environmental digital currencies to help shape behavior in order to create a more inclusive system. So I was wondering if it is something you have considered yet. Thank you.
I'm not quite sure I understood the question, but in a way, there have been local currencies before. There are 13 local, no, more than that, more than 50, I think, local currencies listed in France, which are officially recognized, and they are means of transactions among small groups, and they do reflect social concerns and economic concerns of local communities. I think as a means of exchange, after all, these cryptocurrencies are supposed to be a means of exchanging value in some form or another. I think there will be these sorts of networks where my only limitation on that is that I don't think in the near future those that will be used and blockchain technologies that will be used to solve problems, I doubt that they will be public blockchains, if you wish, accessible to everybody. They decentralized one. They will have an element of permission. They are likely to be permission systems.
So we're in order to finish at 1:30, so I take one more question there.
This was, I think, the last question, and this answer is the perfect lead-in to exactly what I wanted to ask, and that is that it's a pity that we stayed in the last few slides very shortly, because this is where I think the key of the crux of the interesting stuff is, and not just blockchain, but the economic aspects of the blockchains that are outside of the aspect of tokenization of currencies, because there's many of them. And even as we're thinking about this, we're thinking about a state as the only way to regulate systems. But in the future, corporations are becoming much more that new entity that is going to take over those systems. And the most exciting aspect of blockchain is perhaps the distributed aspect of it, not the permissioned aspect of it, but because right now there's examples of it reinventing the internet based on blockchain, which would not be dependent on 13 main servers. So I just wanted to ask you, are you sure that permissioned blockchain, permissioned platforms are really the only things that will be standing once the tide goes down, and perhaps some kind of resilience based on meshed distributed networks is much more possible? Thanks.
I'm not saying that only permissioned will survive, but if you take many of the exciting applications in terms of tracing identity, even in refugee camps and so on, of land registries, of health information and so on. I think there are going to be blockchains which, and by permission I don't mean by the government, but that there will be some requirements for access to the software and to the system, which will prevent everybody and his sister to be able to participate. Simply because but maybe I'm wrong in terms of identity checking and so on. You may be quite right. There will be also public blockchains, but in any event, all these will have to be combined with smart contracts, with things of that sort, or will be, rather than will have to be. But they have much of a future, I grant you that.
Okay. So thanks, Alexandre, for adding some clarity to this thing everybody talks about, nobody understands. And thanks to everybody for coming on the weather was not very cooperative, but it's great when you have a great topic and a great speaker, people come. So thanks. Thank you.